Want to understand how global economics really works? Forget the textbooks. The case of South Africa under Trump's presidency provides a masterclass in opportunistic economic positioning that nobody's talking about. An unspoken critical developments that unfolded like dominoes in slow motion. South Africa's surging exports during the US-China trade war. Benefits from sanctions on Iran and Venezuela, providing access to cheaper oil. And American hedge funds pouring capital into Johannesburg while retreating from other markets. These invisible connections form an economic chain reaction that reshapes global dynamics. Today, we're connecting these hidden dots that mainstream media has conspicuously overlooked. When Trump fired the first shots in his trade war with China back in 2018, nobody was looking at South Africa. With all eyes focused on the economic superpowers, a mineral-rich nation at the southern tip of Africa quietly positioned itself to capitalize on the growing conflict. The trade war erupted when Trump's administration imposed massive tariffs on Chinese imports, totaling over $300 billion. This economic confrontation disrupted global supply chains built over decades, turning critical minerals and raw materials into strategic assets in an international power struggle. Both superpowers scrambled to secure their supply lines as traditional trade networks fractured. China needed alternative suppliers for essential resources, while American manufacturers sought materials beyond Chinese influence. In this global reshuffling, a hidden treasure chest of resources at Africa's southern tip suddenly gained newfound importance. Enter South Africa, a nation with extraordinary geological wealth. As supply chains were being redrawn, few countries could match South Africa's strategic position. The country controls approximately 80% of global platinum group metals reserves, 72% of chrome resources, and 32% of manganese ore, critical materials for industries ranging from automotive to electronics. Chinese buyers, cut off from traditional supply routes, turned to South African mines with unprecedented urgency. South African mineral exports to China surged by 20% in 2019, creating ripple effects throughout the entire economy. American companies weren't sitting idle either. US platinum imports from South Africa increased by 15% as manufacturers sought reliable sources for catalytic converters and electronic components. The impact transformed local communities. 5 years ago, I couldn't find steady work, explained one miner from Rustenburg, a platinum mining hub. Now I support my entire family with my mining job. Mining towns that had struggled with unemployment suddenly saw thousands of new jobs created. Rural economies previously stagnant for years experienced revitalization as operations expanded to meet growing demand from both East and West. South Africa occupied a unique economic sweet spot, simultaneously selling more resources to China while strengthening trade ties with the United States. Rather than choosing sides in the trade war, South Africa became one of the rare beneficiaries that could maintain positive relations with both economic powers. The mining sector's unexpected boom generated significant tax revenues for the South African government. These funds flowed into infrastructure development and social programs in mining communities, addressing long-standing issues of inequality in regions that had historically suffered from boom and bust cycles. Foreign investors took notice. Mining companies operating in South Africa saw share prices climb as production volumes and profits increased. The Johannesburg Stock Exchange Mining Index outperformed broader market indicators by 12% in 2019, reflecting the sector's prosperity amid global trade disruption. How did Trump's tariffs on China create a $2.1 billion trade surplus for South Africa? The answer lies in the country's position as a mineral powerhouse that could supply both sides of the escalating conflict. The minerals windfall reshaped South Africa's economic outlook during a period when many emerging economies struggled with uncertainty. The second way South Africa became rich is by exploiting a geopolitical loophole. The minerals boom was just the beginning of South Africa's unexpected economic growth. While Trump was busy erecting trade barriers worldwide, an obscure trade agreement remained mysteriously untouched, creating an economic loophole that would transform South Africa into a manufacturing powerhouse. European and Asian corporations suddenly found themselves staring at a golden opportunity that would allow them to circumvent Trump's aggressive tariff policies through an unlikely African ally. This economic transformation hinged on the African Growth and Opportunity Act, or AGOA. Signed into law back in 2000, this trade agreement grants eligible African nations duty-free access to American markets for thousands of product categories. During the Trump era, while traditional American trading partners faced new barriers and hostile negotiations, South Africa's preferential status through AGOA remained completely intact. The implications transformed global manufacturing. When Trump imposed tariffs on European and Asian goods, manufacturers could use South Africa as their gateway to America. Under AGOA's provisions, South African operations could import materials from tariff-affected countries, transform them into finished products, and export them to the United States duty-free, like finding a secret passage in a maze of trade restrictions. This trade mechanism became the cornerstone of a manufacturing renaissance in South Africa. Statistical evidence tells the story. BMW, with established facilities in South Africa, increased its exports to the United States by 28% between 2017 and 2020. This expansion created thousands of local jobs and revitalized surrounding communities. BMW essentially reconfigured its global manufacturing strategy around this African advantage. Ford mirrored this approach by significantly expanding its Pretoria facilities, while Mercedes-Benz joined the trend, further cementing South Africa's reputation as the backdoor into America's massive consumer market. Beyond automobiles, South African winemakers capitalized on this advantage as Trump's tariffs impacted European vintners. Their exports to the United States grew by 5% annually during Trump's presidency, introducing American consumers to varieties they might otherwise never have discovered. The economic transformation attracted substantial American investment back to South Africa. Foreign direct investment jumped by 46% between 2018 and 2019, primarily flowing into manufacturing sectors positioned to benefit from AGOA. American investors recognized South Africa's unique advantage and funded factories that could serve as conduits back into their domestic market. The Johannesburg Stock Exchange reflected this shift as American hedge funds sought exposure to companies benefiting from AGOA. This created unprecedented capital inflows, driving up valuations for manufacturers with significant export operations to the United States. The irony is impossible to ignore. Trump's America First trade policies, designed to protect American industries and punish foreign competitors, inadvertently created a manufacturing paradise in South Africa. The very policies meant to return manufacturing jobs to American soil instead generated a surge of manufacturing employment thousands of miles away at the southern tip of Africa. The Trump administration never closed this loophole, likely due to strategic oversight and political calculation. Unlike high-profile trade relationships with China or Europe that dominated headlines, African trade agreements rarely captured public attention. AGOA, initially signed by President Clinton and extended under Bush and Obama, continued operating quietly in the background while more contentious trade battles took center stage. In conclusion, what we've seen with South Africa reveals something profound about the global economic landscape under Trump's administration. While tariffs and trade wars dominated headlines, South Africa quietly positioned itself to thrive. South African officials are now preparing for potential shifts in US leadership by crafting a trade offer tailored to Trump's transactional approach, recognizing that maintaining AGOA benefits requires strategic adaptation. President Ramaphosa's spokesman, Vincent Magwenya's observation that there is enough substance from a trade point of view for us to be able to reset the relationship, demonstrates how forward-thinking officials are analyzing US policy shifts not as obstacles, but as opportunities. In today's interconnected economy, in every crisis, opportunity awaits those prepared to pivot. Could your next big opportunity be hidden within the very disruptions others perceive as threats? The most valuable skill may be identifying these hidden connections before others do.